afternoon, Fort McMurray. Melanie Galea here, your co-host of Let's Talk Lending, and I am with
Barb Pinsent of the Mortgage Center We Connect.
Awesome.
Great to be here, Melanie.
Yeah, well, it's that time of year, right? We do this, we get together a couple times, well, probably 6 to 8 times a year, at least 8 times a year. And the whole purpose we started was to talk about the Bank of Canada rate, but they've been kind of boring. Because
they have been, yeah, there hasn't been a change in that rate in a very long time. And they met again today and no change again, which was fully expected because there's not really much room for them. There's nowhere for them to go but down, and it's at 0.25% right now, and they don't want to get into the negative rate. So I really don't expect that we're going to see any change in that anytime soon. Some are saying, you know, for the remainder of 2022, some are saying into 2023, and of course, a lot depends on what COVID does.
Right. Yeah, okay, so well, I'm hoping COVID calms down. I'm over, everybody's over it, but we're also in, you know, right now the city just made mandatory masks for the next 30 days, and so, you know, we just gotta do our part, right? Get the mask.
We do, absolutely,
and just do our part. So, Barb, why don't we talk about something that will be of value to people? And I think, you know, one of the most common things that I get asked is about down payments. And there's lots of different things to know, lots of details. So why don't we dive right into that?
Okay. Well, I will start with talking about what is required down on a purchase. If you're buying a property and your intent is to live in the property, the minimum down payment required is 5% of anything 500 and less. If your purchase price is over 500,000, then you need to put 5% down on that first 500,000 and 10% down on the difference. So if you were buying a place,
right, like that, up to $1 million,
up to 99999, so it can't go over $1 million. You're right. And if you were buying a place and you know you offer $600,000, you need $25,000 down on that first 500,000, sorry, and then 10% on the 100,000. So 10,000 on the 100,000, 35,000 in total. And a really quick way to calculate that number, I find anyways, quick, is you take 10% of the purchase price. So if your purchase price is $600,000, take 10% of that and subtract $25,000 from that answer. And that's what you need down. I find that an easier way to calculate the down payment.
I like that little tidbit.
Yeah.
Use that. Look at, I learned something. You can learn an old dog new tricks here. Okay,
absolutely.
But homes over $1 million, what percentage down?
Over $1 million varies by lender. So if you're, you know, some lenders have a minimum of, some will do it up to, you know, certain dollar amount. So there are some lenders who will go to $1.2 million. They want 20% down. Some will go to $1.5 million, 20% down. And depends on area, location, you know, all of that comes into play as well. And then there are lenders who have sliding scales. So they will do 20% down on the first $700,000, and then they have a sliding scale. So they might want 50% down on the difference. So that varies by lender.
Gotcha.
But if it's an insured mortgage and insured has to be under that $1 million, then it's the 5% on the first 500 and 10% on the difference.
Awesome. Okay, so let's talk about a few different scenarios about getting your down payment, right? Like situation, the easiest situation is that it's already in your bank account plus more.
Exactly. So it can come from savings, of course. So if you've got savings that you've, you know, accumulated over a period of time, if you have investments again that have been accumulated over a period of time, if you, you know, have money that you've obtained through an estate, those types of things can be used, funds can be used toward the down payment. Down payment always has to be verified, and it can be a pretty nasty, unfortunately, process because the government mandates that lenders are getting the correct type of documents to verify source of down payment. So you need a 90-day bank or a 90-day history if the funds are coming from your bank account, 90-day history of that account. If you're taking from a checking account and moving into a savings account and, you know, accumulating the money in the savings account, then we need the 90 days for the checking account. You need the 90 days for the savings account. If deposits in excess of $1,000 have gone into an account and that $1,000 wasn't from pay, you know, a payroll related deposit, then proof of where that's come from. So, you know, if you've sold a vehicle or, and you have to be careful with that because it does have to be verified. So, you know, if you've been saving money and you know, you got $5,000 at home in cash and you want to bring that $5,000 in and put it into your bank account, if you can't support where it's come from, then a lender's not going to let us use that $5,000 cash, unfortunately. So, you know, don't hoard it at home. You're better off to put it into the bank account, right? Because it's like that adage, you know, money under the mattress. Doesn't work. You can't use that. So Rrsps is another place that the down payment can come from. And if you're taking from your Rrsps, any money that has not been in there for the last 90 days cannot be used. You can withdraw up to $35,000. And when using money in your Rrsps, you have to be a first-time home buyer to use those funds. And it's like borrowing from yourself in essence, right? So the funds do have to be repaid and the government gives you 15 years to pay the money back. So whatever you're withdrawing, and if there are two of you, if there are two people on the mortgage and both want to use Rrsps, both again as first-time home buyers can withdraw up to $35,000 each. So if you're fortunate enough to put that much money away and can take out 70 grand, well, then you can do that. You'll get notice from the government when the funds, letting you know when the funds have to be repaid and how much you're going to have to pay back per year. Doesn't matter where it's paid back as long as it goes back into an Rrsp. And, you know, so if you're going to want to if you want to hurry up and get it paid back right away, then you can pay back more, but you got to pay back at least that minimum. And if in a given year you don't for whatever reason, then the government converts it to taxable income so that at the end of the day, you're going to have that money repaid in the 15 years no matter what. So there's no extension to that 15 years.
Gotcha. So, I was going to ask you, now my question's gone. It seems to me like it's vitally important to make sure you get pre-approved. It
really is. It really is, because there's so many variables. Like, people sometimes are under the assumption that it's a slam dunk, and it is never a slam dunk. And, you know, every lender has different criteria that needs to be met. So, you know, it is a good idea to have somebody do a pre-approval for you, and a true pre-approval, not, you know, like lots of times I will just give clients numbers based on, you know, this is what I think my income is, this is what I think I owe, and this is what my vehicle payment is or personal loan payments are. And a lot of the times those numbers are not really accurate. So, you know, I can give anybody a quick, but who's going to give you $500,000 on a quick little, this is what, you know, like, it all has to be verified, right? So, you know, 500,000 to 100,000, all viewed the same way. They don't care. Same thing is required no matter what you're going to be mortgaging at the end of the day.
Okay. So the next topic I think is like, what about gift letters?
Gifts. Your down payment can be gifted. The catch with gifted is it has to be from an immediate family member. And so that's your, you know, your parents, grandparents, siblings. Can't be a cousin or, you know, an aunt or an uncle. It's got to be what is considered immediate family member through most lenders. And there's always a lender that will do things maybe a little bit different. So like I'm just doing standard because, you know, what is almost across the board, but not, because there's always different things that different lenders offer. Niches, which is the benefit of a mortgage broker, again, because I am able to place with, you know, if something doesn't work here because of one lender's policy, hopefully I can find a fit somewhere else, right? So that's how that works. And again, some lenders want the gifted proceeds deposited into the account. Some want verification that the giftor has the funds. Again, different criteria for different lenders. Gift letters always have to be signed by the giftee and the giftor. And a lot of the times the gift letters are verified. So whoever is gifting the money can expect to receive a phone call from the lender confirming that it's gifted, does not have to be repaid. So that's the gift letter. Yeah.
I think we've gone over. Is there anything else that we missed talking about?
Some employee loans, depending, again, this is lender based, lender driven, but there are some employers who will give loans to employees, Suncor being one of them, school board another. So that can sometimes be worked in and used as the down payment, as long as whatever. And again, I'm not going to go into detail because there's always like this going on, but that can be used as well. And I guess just to mention as well, closing costs. And again, there's all kinds of things that we can do with those. If you don't have the full amount that a lender requires, and the amount that is required here in Alberta varies by lender again. Majority of them want to see 1% for closing costs. Some will look at 0.5%, but again, you got to fit that lender's criteria. So it's like putting a puzzle together, to be honest, when you're doing a mortgage. There's so much that needs to be looked at, and you do what you can to make it fit. Majority of lenders want to see 1% for closing costs of the purchase price. So, if you get up into the higher mortgages, like 600,000, 700,000, your closing costs are very not likely going to be, $6,000 or $7,000. So we can look at different measures for that, and always can look at different avenues, but it's got to fit within the lender's criteria. Which I guess points out that, a mortgage is not always about that mortgage rate either. There's so many other things that, you might have lender A who's got a really great mortgage rate, but you can't always send your file to that lender A because maybe some of the criteria that they want to see can't be met. So very much like a puzzle that I enjoy putting together.
Right. I was just about to say, it's almost like a great mortgage broker is an excellent storyteller, the storyteller of you. And I can't stress enough the importance of a buyer to be completely transparent about their financial situation, because there's nothing worse than going into, you have a deal and then something comes up with CMHC or Genworth, and it's like, oh no, we're not gonna,
which opens that like that. I'm glad you mentioned that, because they're and I have to ask some awful questions sometimes, what appear to be awful questions. But, lenders have been lending for a very long time, and they know what to look for. They probably have tools we know nothing about. So it is important to let me know, and, and I'm not judging. I don't care. Like, I just need to know what has happened, because if I don't know about it and something goes in and something pops up, well, now we have a problem, because once that file's been, and like, if I know about it, and I'll do my best to I'm not going to be doing things that I shouldn't be doing, of course, but information is power, and if I have that information, then I know what to do with it.
Absolutely.
So I'm glad you brought that up.
Yeah. Well, here's the thing, like, it's important to hire the right real estate agent, right? But even before you get to looking at houses, hiring the right mortgage broker, Barb Pinsent, is like one of my favorites, because she's there for you. She's there to make sure and handhold, right? But also to be like honest with you. And so that's why I don't want to take anyone else. I don't want to take anyone out to go looking until you've had those conversations, because it's not fair to you, like, you go out looking, you fall in love with something, and then, you get pre-approved, and it's like, oh, I can't do it. Right. And that's not fair to sellers either. They're anxious to get their home sold. So it's so vitally important to hire a fantastic mortgage broker. And it's more than just the interest rates. And that's why sometimes it might be good to talk to somebody like 6 months before. And it doesn't mean, Barb, that you have to necessarily pull their complete credit file, but you might be able to coach them.
Yeah.
Even if you do, to say, okay, clear up this, clear up that, save this, save that. And then I've even heard of you like coaching somebody to get ready, and then 6 months later, they're ready to go.
Yeah. And another thing that again, you bring something to mind when you say the things that you say. The pre-approval is only a pre-approval. So, I'm going to look at an application, I'm going to look at credit, and not everything is perfect. Like there are times when payments are missed. There are times when, like lenders are looking at debt servicing ratios, and we all know what those are. But if, they have a file that maybe there's, somebody's income is really good and we're going to 44% of their income because they owe, whatever to revolving credit. So, you've got X amount of dollars owing on credit cards, lines of credits, even though those maximums are there, that, if a lender feels like there's maybe too much credit there, they will maybe take issue with that. The lender might not have an issue. The insurer may. So there's just like so many, and I'm always the optimist. I do, when I'm looking at a file, I want to do everything that I can to get that file done. Ultimately, I want my clients to be happy and move into that home. But there are times when I've pre-approved somebody and said, yes, like I'll mention, that the balances owing are on the higher side. So it's not a slam dunk. That it's not done till it's done. Not Absolutely. Till you write the offer, goes to the lender, goes to the insurer, and the only way we sometimes know 100% whether or not a file is going to get done is when it hits the insurer, because they have the final say when, right? So there's that too.
Yeah, absolutely. Yeah. Okay, so if you want to get a hold of Barb and myself, letstalklending.com. It gets you instantly in touch with Barb and myself. And maybe you want to get that pre-approval, and maybe you're not thinking about spring, but it could be a good time to connect with Barb and or myself, because first of all, you need to be ready for your finances. And then even knowing what you want to look for, your wants and needs list could change a lot. Inventory is still the lowest I've seen it since April 2007. It's insane. The last time I checked, it's like in the 150s north of the bridge for a single family home. It's insanely low levels. So what I'm going to also say is be patient. Be patient, but you also want to be prepared. Like that's why I can't stress enough the importance of getting in touch with Barb, getting yourself ready to go. Because when you want to, I would hate for you to miss out on your dream house because you didn't take her advice and didn't get it all done ahead of time, because there's a lot more hurdles than there ever has been to lending. I would say
that's so true. Yeah, that is so true. Things have changed so much. It's definitely not what it was way back when, and not even way back when like it changes overnight almost. They're different times for sure.
So don't be intimidated by that either, but it's just sort of if you plan properly, you'll be ready to go when you want to go.
That's right.
Or when the time is right? Like that's the best way to say it. All righty, Barb, thank you so much for being my co-host for this episode, another episode of Let's Talk Lending. I think it's important that we educate people so that you can make the right decisions for you. And Barb, anything else you want to add?
Just that if anybody ever has questions or, like pop it in, send us a message. Like we're happy to help in any way that we can.
Absolutely. I'd agree with that. Alrighty, stay safe. Go trick-or-treating if that's what you're doing. If you want to do the Halloween tour, go to my Facebook page. There's an awesome map on the Halloween houses there. And also look for mid-November. I'm going to be doing 30 videos in 30 days about local businesses and how to shop local in Fort McMurray. All right, till next time, Barb. Thank you so much.
Thank you.
Video, tag a friend, and thanks so much.
Thanks, Melanie.